It's great to do our regular catch-up on what's happening in the grain sector today. We're speaking with the head of agency at Market Check, Ed Nankerville. How are you going, Ed?
Yes, well, thanks. How are you going?
All right, thank you. In recent chats we've had with Tess Walsh and others about what's going on in grains, it seems we're still choking on this big harvest we had over in the East Coast particularly, but not so much in South Australia.
That's right. So, South Australia's got fairly clean export channels comparative to the East Coast. There's a lot of grain still lying around and we're still lacking the ability of getting it out in the eastern states. But with SA, just purely on crop size, it was a bit smaller than normal. The export channels are flowing, so the market has been less susceptible to the offshore falling in SA. So that's been it's a bit of a blessing. Obviously, prices have been more insulated, but a bit of a curse because it means that the growers didn't get as good a crops as they would have hoped, basically. So, but I think this year there's a lot of potential out there.
It's a lot of potential because there's still some scepticism about just how much is going to come out of Ukraine and Russia.
That's right. So they're talking the talk at the moment. There's all sorts of committees about grain exports out of the Ukraine and Black Sea and opening up sort of 3 ports out of the Black Sea, out of the Ukrainian export channels. But that agreement was signed and then they bombed Odessa.
Yeah.
So it is completely up to the whims of what Russia wants to do. On that basis alone, it's unlikely that exporters out of the Ukraine are going to get insurance or get, who's going to take that risk of bringing grain out when there's, active warfare happening. So
yeah, it did seem there was an act of good. It looked at first blush like a surprise act of goodwill from Russia to get the food coming out, but then suddenly they said, but we're going to squeeze Europe on our gas exports as well. So it was sort of, I think the market's got a little bit more scepticism about exactly whether that food's going to move out of Ukraine.
That's right. There's a whole lot of question marks hanging over that conflict, and it's not going to resolve itself in the short term very quickly unless, there's massive changes and pressures from the world and that kind of thing. So, it's going to be a very questionable couple of months.
Yep.
It's going to be a long-term regrowth in that area.
Yeah, those 6 months we mark the anniversary since February of this conflict really getting going. So, looking at the canola front, I noticed on the Kwinana terminal prices at least, that's sort of had a bit of an uptick in recent weeks. But there's still very good prices for canola for Australia this year.
That's right. Past week, the price is sort of, past 2 weeks, I suppose, prices have been pretty volatile, but mostly upward trending. And that's basically to do with the soybean acres in the United States. They're coming to a key growing area at this point in time, and it's very hot and dry, and the forecast for August is very hot and dry. So the balance sheet or supply sheet for the world is already very tight. So any hiccups in production is detrimental to, demand or detrimental supply, and it'll generally cause higher prices. And that's why it's so volatile at the moment. We're seeing big kicks in every day or a big fall every day, because any time there's news affecting supply, it just moves around fairly volatile. That's kind of what's happening in the last couple of days.
Yeah, well, at least I guess those Australians, and a lot more of them, have planted canola this time around, probably feeling fairly confident in the way the price is travelling at the moment.
Yeah, look at certainly this time, but who actually knows?
Well, there's still a season to get it out of the ground yet too, and anything can happen on that front. Ed Nankerville from Market Check, thanks for joining us today for that update.
All right, no worries. Thank you.